Mira Business FM, Dubai's home of business radio.
This is the Morning Drive with me, Tim Elliott, here on Mira Business FM, and it's really all about your finance. Now, capital doesn't wait for certainty. It moves from tighter global regulations to shifting tax frameworks, new pressure on cryptocurrency, new pressure on property, cross-border wealth. The question that lots of investors are asking right now isn't really what worked last year, it's where should my money be today? Is there a difference? We're going to try and find out. Where's the smart money moving now? Which assets are gaining traction, and how are investors adapting in the current environment? Remco Coerman is the founder and CEO of the international advisory and investment firm Epic Edges Group, and he's with me in the studio. It's good to meet you, Remco.
Likewise, good to meet you. Thank you for having me.
Good to have you here. I wanted to start this morning, and this will be kind of a round-robin conversation in lots of ways. There's so many things to kind of unpack, really. Couple of general observation type questions, if you don't mind. And first of all, I was reading you in Khalij Times at the end of the year, and I'll put the quote to you now. You said last year, 2025, rewarded the most useful assets, not the most fashionable ones. And it was the year that investors stopped asking what can grow fastest and started asking what still works when things break, which I thought was a good quote. Reading that now, as early as we are, we're still in January 2026, this year is more of the same, isn't it?
It is. It's more of the same, and it's actually accelerating if you look at it.
Yeah.
There are so many things changing in the world, and so is the investment world is changing as well. So if you really think about what's going on, anticipate on the next steps.
Okay, so it's fair to say lots going on in the world. We are in uncertain times. We hear that kind of, I'm doing the air quotes thing again here, oft repeated. Do you feel like where we are at this point, it's a more critical moment for investors when it comes to decision making, rather than, playing the long game and waiting things out?
Yeah, you should stay ahead of what's coming. And like I said, it's an unstable situation, so you have to look at your portfolio and rethink about next steps. So if you look at what you just said, it used to be quite straightforward to invest in projects that you can have a high return. For example, in IT, high risk, high return. But nowadays, things are changing. So you have to focus, that's my advice at least, focus on more recession-proof projects, which is totally different.
Okay, the other thing I wanted to ask you, just before we get into my kind of more structured questioning, is I'm interested in your thoughts with investors and investment in mind as President Trump enters the Davos spotlight today. We know he's on the way, may have already landed. I think he's still in the air, particularly given the geopolitical backdrop, the situation over his recent actions. And of course, I'm thinking intentions towards Greenland, because that's going to be scrutinized this morning. Let's put it politely. How welcome he will be, and even he's laughing about that at Davos today, is the other question. How are you reading this whole situation? What are your thoughts?
My thoughts are mainly focused on, because I'm European, if you look at how the European countries and the EU is responding to this, they have no clue what to do. And they were actually just following him as a leader, because what he did in but it's 1 year that he is in the office now, I think.
It is.
He did something totally different. And that's not the way you're supposed to do business. That's what they think. So they look at him, what's this guy doing? But he's actually serious. It's not joking. In the beginning he said, let's see, it will turn out, it will go back to normal, but he's still not going back to normal. As far as we consider normal. Things are crazy, so they have no clue what to do.
And it's so difficult for somebody like you, because what markets like things to be, there's a certain predictability that is comfortable, and there is nothing, whatever you think of President Trump, and I'm not making an assessment of his character or his actions, the one thing I do know about him is that I don't know much about him and what he's going to do.
I know. And it's unpredictable, but it's like he's doing things that nobody has ever done before. And you can say, you can like it, you either like him or you hate him, but at least there's something going on. Yeah. It's not boring, huh?
That's certainly the truth. Your group operates across 5 jurisdictions, I read. From what you're seeing with your clients at the moment and the advice that you're hopefully giving your clients, where is the smart money actively moving at the moment?
The smart money is actually moving away from the investments areas who are influenced by let's say, the things that are going on in the world. So emotions. And one of the things that's very emotion-driven is like crypto. So people used to be very good at crypto. You can make a lot of money in a short time if you know what you're doing. Yep. But it's so emotionally influenced. If Trump calls out something, then it goes down or the other way around. So it's not stable anymore. So the quick money is gone. And if you look at where the fast money, the clever money is going, you have to look at you have to more looking at protecting your money instead of making a lot of money in a short time. So that's what I said before. You have to look at the options for recession-proof projects. Those are agriculture, for example, or healthcare. There are more like sectors that you can actually invest in. That's where the smart money is going now.
Okay. What about here in the UAE? I wanted to ask you, again, fairly broad question, but beyond the real estate headlines, because that really is obviously the real attention grabber. What is it about the UAE that makes it such a strong, an increasingly strong investment base?
It's all the commercial real estate, for example. I'm not a big fan of real estate because I think there's a bit of an oversupply, but it's a different story if you look at the housing market. But for commercial real estate, there's a huge demand. So it's always very stable investing in that area. But from a business perspective, what we do, we set up the companies, we set up the trust, the foundations, and we do business from the UAE. So the UAE is actually the home base, and you can build your wealth, you can protect your money, you can build your life while you do business all over the world. So it's mostly the hub function. And the UAE should actually, especially Dubai, Abu Dhabi, should focus more on the fact that they're very strategically, the location is strategically. If we do business in Africa and Asia, from here you have 4 or 5 hour flights and you can go everywhere. So the location is actually key in the moment.
Okay. Let's get back to crypto just briefly. You mentioned it there, the emotions at play. There's another question I want to ask you about emotion. How you divorce that? How you take yourself kind of outside of yourself as well? We'll come to that. How has the way serious investors approach cryptocurrencies, how is it changing? Because we have a nascent industry, really 10 years or so. Kind of a new thing, but also completely not a new thing, which is a weird juxtaposition, I think. How is it changing at this point in time?
It's maturing. It's like I said, 10, 15 years ago it just started, and now it's like it's not that mature as it is in the stock market, for example, but things are getting better, it's getting more stable, but still, there's a huge emotional influence. Depending on what's happening in the world, like I said, depending on what Trump calls or he says something in the news, and then it goes down or it goes up. It's so not stable yet. But on the other hand, if you look at my clients, all of them, they are investing in crypto, but let's say 10 or 20% of their portfolio.
Okay.
So I wouldn't recommend to put everything in it, but if you diversify your portfolio, that's the key. And crypto is, of course, and there's not only Bitcoin, but also a lot of the altcoins. If you know what you're doing, you have to really look into what's going on and see and predict what the next step will be, and you can still make a lot of money. So, but it's still not a mature market.
Is that what you say to clients? Because it used to have 10% in gold in your portfolio, didn't it? That was kind of the general advice. I guess at the moment it might be slightly higher. But is crypto the new gold in terms of the way you allocate assets?
Eventually.
Percentage-wise.
Yeah, if you percentage-wise, I would say that's true, because it's a new backbone of the whole system. Yeah. The whole financial system is about to collapse. On the other hand, we've been talking about that for years now. It was supposed to collapse already, but it's still not.
It's been collapsing for hundreds of years.
It's a slide scale. It's going down.
There is a change coming.
Definitely. There is a change coming. So we're looking for a new backbone, like a national reserve. Trump had the idea of putting Bitcoin as a national reserve, or Ripple. That hasn't happened yet. But you see, there's more stability in the market now. It's getting more mature. So eventually, I think it's the next big thing if you look from a backbone perspective.
Okay. In terms of digital assets in particular, I mean, frameworks are they're emerging to provide legal certainty. You've got countries exploring central bank digital currencies, regulating stable coins. In the EU, the Digital Operational Resilience Act mandates third-party oversight. So digital assets are no longer kind of left of centre. It feels to me as though we're at a point where it's mainstream. Digital currency is now. We're all kind of accepting of that. Am I reading this correctly?
Well, you don't have a choice, right? It's implemented. Central banks are implementing it. The CBDC, but also there's more than that, the controlling. If you look at DAC 8, which is controlling of the cryptocurrencies, CARF, crypto exit regulation worldwide, everything is controlled. Wherever you have your portfolio, wherever you have your wallet worldwide, it will be, the information will go to the country where you're a tax resident. So they will know that you have your wallet on the other side of the world.
Sure.
And that's all digital.
Yeah.
So if we have a if we like it or not, we have to.
It's a different time. It's interesting you say, I mean, everything is controlled because global regulations are tightening in so many areas, so many localized agendas, for example, driven by tech, AI. We've got new risks, not just cyber risks, but climate risks as well. There are cross-border tax changes. Here in the UAE, we've got the new framework for digital finance, the UAE's new CBUAE law. So that supports kind of the digital dirham, doesn't it? How are these kinds of developments, and there's a whole list more, already influencing where people put their money?
Yeah.
Do you think? How is that starting to impact?
It will have a huge impact. So you have to...
In which direction, I mean? In terms of
like I said, it will be controlled. The government will actually, they know where your money is, and they know where it is and how much it is and what you do with your money. But for my opinion, there's a huge difference between your private wealth and your company's wealth. And that's what I advise my clients. You make sure that you don't have any private wealth anymore, just put it in the company. And in many countries, you can put it in a trust, you can put it in a foundation, in a company, then it's not your money anymore, but your company's money, which is different. And from a European perspective, that's really important because then it's not taxed. It's only taxed as soon as you take it out. And private wealth is getting taxed more and more. Everything is under control. And that's a different story if you put it in your company. So you can, the good thing is for the kind of job that we are in, my line of expertise, we're always looking for options. And if there are new regulations coming, there are also new options. That's a good thing.
Yeah, for sure.
Yeah.
And I mean, you have to make a distinction there as well, because, you know, what you're saying is not tax evasion, you're talking about tax avoidance.
Absolutely.
And you have to make that distinction.
That's a big difference.
In that case there. Let me ask you another really broad question. I feel like I'm asking you these huge, broad questions this morning, but they're all things that are in my mind. Because, you know, again, it's an uncertain market, let's put it. People are kind of jittery. Not even jittery, just, I think there's this, what's next? What's coming? What's President Trump going to say? Because, you know, he is moving markets. What's the biggest mistake investors are making at the moment, do you think, when you look at what's going on?
Let them emotions take the overhand.
Still,
and it's kind of greed, and that was beginning in like it's going to the casino. It's the same what happens with crypto. I can make €1,000 a day, but let's try to make it 10,000. At a certain point, you have to put this is it. This is my goal for the day. If you make your profit, then you get out. Okay. But greed is that's an emotion, right? So that's not a good thing. You should not listen to that. Just make a plan, stick to the plan. That's the way you should act.
That's, I mean, in a perfect world, that would be a great way to exist, wouldn't it?
Yeah.
How do you rein people in? Because you must have clients, I'm guessing, and no names. I'm not looking for that. But how do you rein people in? Because you must need to do that. 'Cause it's a very difficult thing to do. Human nature. The one thing that we've talked about today, I think, when it comes to human nature, is you can't predict it.
No, but you have to learn it the hard way.
Yeah, okay.
So everyone makes a mistake and says, I shouldn't have done that, but you did. Okay, well, shit happened, let's go on. That's what happens. Yeah. And you have to take your losses and then go for the next step. But from now, it's like the most important thing is diversify your portfolio. So that if something goes wrong, it's not a big deal. You lose like 10 or 20%, next day you compensate for your losses. So you should look at it from that perspective.
It always comes down to that, doesn't it? That's my portfolio. Yeah, spread your risk.
And overall, if you look at the average, you still make your profits. That's fine.
And that's the best approach in uncertain times, like where we are now.
Yeah.
Okay. Yeah. Investors today, more focused on growth or protection? How do you balance the two? You've expounded the virtues of being slightly more protective, I think, at the moment. Yeah. How do you how do you talk to your clients about, I don't know, not exceeding their own expectations?
Yeah, it depends a little bit on how much money they have available, and if it's the money that they really need or it's money that they can miss. That's a big difference. You can obviously invest in projects with a higher risk if you don't have an issue with losing 1 million, that's fine. But if for you it's a big deal, then you should, of course, think about what you're investing in. But my advice is always, like I said, diversify, that's the key now, but also look at the recession-proof projects. But you know there's a recession coming. We actually are in a recession, even if we're not aware of it, but we are. Things are going down now from now. It's not getting any better. But in these uncertain times, the biggest companies have been started in low economic situations. So there are so many options. So if you look at agriculture, look at healthcare, look at food, things like that, the manufacturing of food companies. We invested in a cocoa plantation, for example. Those are the best things to go. And if you look at a geopolitical situation, don't let them influence it. Just make sure that you have your portfolio wide and it's broadened. And from a continent perspective, Africa is the next big thing. I keep saying that. There's so much things going on in Africa. It's quite impressive what's happening over there.
Okay. In particular, what are you looking at in Africa?
It used to be the situation that they needed Europe. The European countries in the colonial times, they were needed in order to make something happen in Africa. But now it's the other way. They don't need Europe countries anymore. Not at all. They don't need France, they don't need Germany, they don't need Netherlands, they can do it themselves. And I've been going to Africa like 10 or 15 years. And if you see now what's happening, it's amazing. Every time that I'm back there, there's something new. The developments are so immense. It's hard to believe. They overtook actually Europe on all sides.
Okay. What about precious metals? I mean, the records just keep coming. Gold and silver, once again this morning, record levels for, what was it? I saw this morning, was it 48.40, something like that, I think it was for gold this morning, around about there at the moment. How much more have those kind of traditional safe haven assets, like precious metals, come to prominence, both in terms of allocation, but also in terms of, client demand? I mean, it's the last year or so, isn't it, that I guess... People, is that the case?
Yeah, it is a little bit more than that. It started 1.5, 2 years ago.
Right.
That you look for some stable opportunities, and gold and silver like metals, but also lithium. We have like some metal mines, gold mines. That's immense. Right. Developments are huge because it looks like a stable market. It is actually a stable market, and the profits have been immense the last few years.
Yeah. Okay.
So, yeah. In an economic uncertain situation, people are always looking for some kind of a certain investment, which makes total sense.
Yeah. How much gold should investors hold in their portfolios?
For now, I would say 30-40%.
Would you really?
Absolutely. For now, yeah, because I'm expecting even it's getting better. And as soon as everything goes totally down, because there will be a lot going on in the next few months, at least you have your gold and silver.
What about silver? How much?
Yeah, silver is the same. Yeah,
really?
Yeah, it's catching up.
Yeah,
I think it's a bit of undervalued, I think, in my opinion. Everybody was going to gold.
The perceived wisdom seems to be that we have a regular gold commentator, Jeff Rhodes, who comes in. He'll be back in on Friday. His prediction for gold this year: $6,500, $6,500. That's his thinking, and he's just upped his silver. I say prediction, but I don't want to put him on the spot in that way. But he thinks it could reach $150,
and he's saying he's a gold guy. Now. You said so.
He's a gold. And gold and silver guy.
Okay. Yeah.
So certainly he would agree with you.
Yeah.
Couple more questions for you, Remco. And I appreciate that we're kind of going all over the place here, but I don't know where you zero in at the moment because the unpredictability is so prevalent. Anybody listening, watching this at the moment, what smart move would you suggest at the moment, even if you're not ready to invest, but you're thinking, look, maybe you have a bonus or a lump sum or something, or you're looking to allocate, a percentage of savings to something. Would it be Africa? Would it be gold? Would it be silver? What's in your
It's
head?
very easy for everyone, even if you don't have a lot of money available for it, to start small. You can do it in silver and gold. You can do it on your bank app. Most banks here in the UAE, you can actually just invest in some silver or gold. Yeah. It's a great way to make money. And you get to use, actually you know how it works. So start small, start with small steps.
Is it the habit, do you think? Is this?
It should be a habit. So
for somebody that doesn't have that habit yet.
No, but the thing is,
learning that.
Yeah, but a lot of people, especially from my generation, they're used to saving money. Put it on your savings account. But that's something from the past. You should do the same.
It's like
that's the same.
It's like you're looking into my soul.
I know. That's the way it works. But you forget saving because the worth of the money is getting lesser by putting it on the bank.
Yeah.
Because the inflation rate is higher than the interest rate that you get. So it doesn't make any sense. You could actually replace the saving. So let's say you do 1,000 dirhams per month.
Yeah.
Don't put it on the savings account, put it in silver or in gold. You can do it on the same account on your bank. That's the way to start. Small steps.
Okay.
Before you know it, you get used to that.
What do you say to people that come to you? You work with lots of, I guess, high net worth, ultra high net worth, people like me.
Yeah.
You know, you're working with lots of different clients. What do you say to people that use that well-worn kind of phrase? Look, I really don't understand the jargon. I don't get the markets. It's not for me. That's not my area. How do you counter those kind of? Well, they're not arguments, but they're feelings as much as anything.
Yeah, but the thing is, it's a comfort zone. They're not used to it. Like I said, I was brought up with a situation of in a life that you have to save for your future, for your pension. That's something of the past. It's not happening anymore.
Yeah.
But if you have to do something different, at a certain point, you have to do it. But you have to get out of this comfort zone. So it's a process. For example, I have very high net worth individuals who never had a company, but they get one way or the other, they do have the money. So I advise them to put that in a company. So protect it. So get it out of your private wealth, get it to your company wealth. But then they said, I never started a company. Okay, but you have to do that. You have to take the step. And once you do it, then you look back, it wasn't that hard. So you have to do everything that frightens you, that scares you. And even for people, I'm 55, so even in my generation, you have to learn something that you didn't before.
Yeah.
Do something that scares you, that helps you. And it doesn't matter if I talk to my son like that, and my son is 8, so I have the same conversation with him. I'm scared to do that. I never did it before. Okay, but do it. And once you're done, you see, hey, it's not that bad. And even in people in my age, do something that you didn't do before. Get out of the comfort zone.
That's a good piece of advice. I like that. It's interesting, though, isn't it? Because I mean, you and I'm guessing, come from a generation where, we were very used to this idea of job for life.
Yeah, absolutely.
And that has completely changed. And I think that in lots of ways that's upended the world in that it's perfectly okay to move now, to do something, to learn something new, to become a barista, start a coffee cart, whatever it is that's in your head that you want to do, and to jump from career to career. Therefore, financial planning is a completely different matter, surely.
Yeah, but it depends on what you do. Because like you said, nowadays, there are so many options. You can make business on the internet. You can start your own company in a day. You don't need to do much for it. You can start making videos. That's what I did a few years ago. Started making videos about my experience, about my knowledge. And that turned into a business. So the financial planning is not in front of that. It's actually running behind. So you have to just do the things and do your financial planning based on what you're doing instead of the other way around. Because we are brought up from you have to plan first before you do. But now it's the other way around. Do it first and then you start planning.
Is there an element in your, we're running out of time, I keep asking questions about you, but is there an element in your job of the psychotherapist in some ways? Do you feel like that sometimes?
Yeah, sometimes I do.
Yeah, I bet you do.
I have clients hiring me just to talk to them. Yeah. And then after an hour I say, what have you been talking about? I have no clue. But, you really helped me. Okay, well, it must be enlightening for you. And it's funny. So in a certain way, it definitely is. Yeah.
I love it. You're such a Netherlands guy, so direct. I love that.
I know.
All right, final question for you. What separates investors who are going to do well in the next phase over this year, for example, from those who will struggle, starting from today?
The people who will survive in this world are the people who will diversify and not let emotions take the overhand. So you have to look at what's going. And again, I come back to my repeating phrase from invest in recession-proof projects. So make sure that you are prepared and whatever is happening in the world, it doesn't influence your portfolio. Okay. If you don't do that, which means for a lot of people that they have to totally change their way of investing. But they have to be open for that. The world is changing, and so is the investing world.
And it's back to that mantra of earlier, isn't it? That, be ready to learn, to do something new, move out of your comfort zone. Be prepared,
absolutely.
Yeah. And what you're not saying there is be ready to take more risk. You're saying
not necessarily.
Be ready to try something, be ready to jump in.
Yeah. In a certain way, every investment is a risk, of course.
For sure.
Yeah. But it's better than putting it on the savings account.
All right, then. I've enjoyed talking to you, and I mean that. Remco Coerman is the founder and CEO of Epic Edges Group. I hope you'll come back and join us again.
I will, sure.
No, I appreciate
I'd
it. Good
love
to talk to you this morning.
Thank you.
This is Mira Business FM. It's the morning drive. Get in touch with us, with the show. Tell us what you think on social media. It's always appreciated. A like, a subscribe. Remember, everything we do is available to listen and or watch again on the website, on YouTube, wherever you get your podcasts from. Just search for us. And a quick reminder as well, we have a new show that's just started here at Mira Business FM. It's called Crossroads. It's a collaboration with Middlesex University, presented by Dr. David Tully, who's been a guest on this show a few times, and Dima Magalse. They're both from the uni. It's a show about the business of media, entertainment, much more, every Friday, 1 to 2. Wherever you find your podcast, just search Mira Business FM. The news is next.